Welcome back, everybody. So today we are talking about markets, economics, and everything else in between. Now, if you are new here, thank you very much for commenting, subscribing, liking, and most importantly, watching to the end of the video. I do reply to every single comment. There is not a bad comment. There's not a good comment. So please just leave your comments. I do read them all. I do reply to them all. And most importantly as well, I really want to build a community around the comment section because I think comments just in general are massive hidden gold mines in terms of knowledge, in terms of different types of views from around the world. And that's what I kind of want to do. I want to kind of share ideas and share knowledge in the comment section, what ultimately allows us to be more educated around these type of topics. So anyway, let's get into the rest of the video. So I wanted to talk about something what I shared about 3 months ago, and that was just in relation to the S&P 500 and the trend lines, what the S&P 500 has been respecting over the last 25 years. And about 3 months ago, I was kind of highlighting that the S&P 500 is coming up to a very, very, very large area of resistance. And I wouldn't be surprised if we saw some type of pullback from that area of resistance. Now I have no idea why the S&P 500 has been respecting these trend lines over this period of time, but I just wanted to kind of give an update on the screen now, just in terms of where we currently are from a trend line perspective, because I just found it very, very fascinating. And also as well, I wanted to touch on NASDAQ just in relation to Fibonacci retracements. Now, I've shared this before just in terms of areas of support and resistance. And I just find it very, very fascinating just in relation to how the market reacts to these areas of support and resistance. Now, as you can probably tell, we are at the area of resistance. And obviously, we are trying to break through that area of resistance and obviously go back to an all-time high. Now, the other area what I want to talk about today is just in relation to narratives, and narratives from a financial media perspective, narratives from a YouTube perspective, just narratives in general. And the narratives at the moment are the bond market is doing exceptionally poorly, what means that people do not trust the US with its money. I have highlighted in a few different videos that I think a lot of people have this massively, massively wrong. But I just want to touch on today the narratives around this. So the narratives is that the yields are spiking, what means bonds are going down, what means that everybody is piling into Bitcoin and everyone is piling into gold. Now, we have seen a massive surge in gold. And over the past 2 weeks, I have seen so many gold pundits, people who manage gold portfolios basically talk about how gold is absolutely amazing, blah, 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 blah. And obviously they're saying that because obviously they're talking their own book. So I'm taking that bias into account, but I'm also taking into account the overall narrative. Now, having said all of that, I just want to touch on my perspective just in relation to Bitcoin and gold. Now I am probably one of the most aggressive Bitcoin maximalists you can probably come across, but I am very skeptical at the moment just in relation to gold and Bitcoin. And the reason why I say that is, like I was saying to you before, I believe that the US is trying to showcase fiscal dominance to the rest of the world, what ultimately forces the world to pick who is going to be the next global leader. And they are forcing that upon a lot of countries at the moment in the sovereign debt markets. Now, as a result, obviously, you have a significant amount of instability in a lot of these countries. And a lot of these countries are forced to liquidate a lot of things. And not just China, but I think there's a lot of countries around the world who own a lot of US treasury bills, and they are forced to sell them treasury bills, what ultimately makes the yield spike and makes the DXY and the dollar go down to obviously prop up their internal system. And we can kind of see this in the CNH-CNY spread in China. And this is why I think a lot of people are misleading what is currently going on. But the reason why I want to touch on this dynamic is because the narrative from a retail perspective and the narrative from a institutional perspective is that everybody is running into gold and hard assets. Even though I do think that is true, I do think we run a massive risk in terms of a liquidity crash, meaning that a lot of these countries are forced to sell their assets to prop up their entire financial system. And when you look at China, China holds about 190,000 Bitcoin and a shed load of gold. And obviously, once they're out of US treasury bills, I can imagine them selling a lot of gold and a lot of Bitcoin to prop up their internal system. Now, am I saying that this has to happen anytime soon? No. But am I saying that there's probably a large probability of this happening? Yes. And the reason for that is because you are forcing nations to basically pick between the US and China. Now, ultimately, if that means destabilizing the Chinese economy, China has to sell some of their assets, what ultimately props up their entire financial system. So now if they are forced into that position, I can see that China would be obviously selling their gold reserves and obviously Bitcoin reserves. And like I was saying into my previous video, it's the entire stack. It's not necessarily just China versus the US. It's entire Western values against the entire Chinese values, just in relation to how you run the world. And I know we've been having a lot of discussion on YouTube as well as on Instagram, just in relation to demographics, just in relation to economies, just in relation to technology, AI, chip manufacturing, etc., etc., etc. I mean, all of that is up in the air at the moment. And ultimately, a lot of people are getting lost in the weeds. But I think the bigger picture is that we are asking the world, who do you trust with your money? And whoever you trust with your money, go into purchase their debt, what ultimately brings the yields down and obviously makes the bonds go up. Now, I think the US will be in a great fiscal position because it will allow them to basically refinance $36 trillion, of which 40% of that needs to be refinanced in the next couple of months, if not year. So obviously, if the yields are significantly low, they can basically refinance the entire debt load at very, very cheap, desirable rates, what will allow them to build all manufacturing and a lot of other different types of things inside the US. And you don't necessarily run the risk of a national security risk from a AI perspective, from a chip manufacturing perspective, because ultimately, the longer this goes on, obviously you run the risk of not necessarily being the global superpower. And if you do not do this, you also run the risk of a sovereign default debt crisis, what is significantly insane for the United States to put itself in that position. So I think that this is the best way to do it. But ultimately, there is a lot of moving parts. It's very, very noisy. And I think it's going to be incredibly disruptive because you would basically bring the market down to about 2022 levels, what I don't think is too bad from a historical average. But obviously, it's going to be very, very painful for people to see the price going from, let's say, 10 to 5, right? The emotional pain of a loss is significantly greater than a gain. And as you can probably imagine, when people lose money, it hurts. People become a lot more emotional. Now, I do think that this plan is absolutely genius. And I think a lot of people are really underestimating Scott Benson. Now, I know I've touched on Scott Benson before, but he was the lead macroeconomics analyst for Soros Fund. And he's done a lot of things in the sovereign debt markets, currencies, etc., etc., etc. And he has a very, very, very good understanding of macro as well as geopolitics. And to think that he doesn't know what he's doing, I just think is absolutely insane because he has a very, very, very good understanding of all of these macro dynamics. Now, granted, can you tell everybody your plan? No. And the reason why you can't tell everybody your plan is because your competitors will obviously change their structures and obviously adjust dependent on that information. So you have to look chaotic and you have to look crazy in terms of your direction, what obviously makes them keep second guessing. And ultimately that massively destabilizes China's economy, what puts them in a very precarious position where they have to sell US Treasury bills and obviously sell gold and probably will have to sell Bitcoin. Now, like I was saying, in that type of event, it would typically be called a liquidity crisis, where everybody just sells everything to protect their entire system. And in that short window, you'll be able to figure out who do people trust with their money, because a lot of people will be flooding back into bonds. And the biggest question is, what type of bonds will they be flooding into? And that is obviously all up for debate. And that is what we have been debating for the past couple of weeks and months. But at the moment, like I was saying, going back to the party analogy, everyone's still a little bit drunk. Everyone's starting to sober up. Everyone's not really trusting everybody. Everyone's looking at the two guys in the corner who are obviously gold and Bitcoin, who have been sober all night and saying, come with me, we can drive you home, we can drive you home. And I just think, yeah, that is correct at the moment. That is the narrative, that gold, Bitcoin, hard assets are the best things to own. And I'm not necessarily saying that they're not, but I'm just saying that that is the narrative. And ultimately, if you wanted to ride that momentum, you could ride that momentum. But I do think there's a high probability that China is forced to liquidate their Bitcoin and gold holdings, what would have a massive impact on their overall gold price and Bitcoin price. Now, granted, I could be massively wrong in that assessment, but I think there is a relatively high probability that that could potentially happen, especially if the US starts to turn up the heat in relation to tariffs and obviously destabilizing their entire economy, what puts them in a very difficult position because they are forced to liquidate. They do not want to liquidate. And as you can probably imagine, when something like that happens, these countries, these nations are going to use every single different type of media outlet in terms of broadcasting their messaging, what ultimately makes a lot of people confused, and they think, what is going on? Why is this happening? When ultimately, when you start to look at money flows, when you start to look at the sovereign debt market, when you start to look at the long end of the yield curve, everything becomes crystal clear what is absolutely going on. And like I was saying in my previous videos, I have been very emotional over the past couple of weeks. And it's not necessarily I'm emotional based on price action. I'm emotional because we are really sticking up for Western culture and everything what Western values kind of stands for, plus the Constitution. And I just find it incredibly patriotic, to be honest with you. And a lot of people really can't see past the word Trump or the color red or blue or whatever. And it's nothing to do with that. I don't even think it's anything to do with even money. It's all in relation to sovereignty and values in terms of what system do you prefer to be in? Do you prefer to be in a free system like the US? Well, obviously, even that's up for debate, right? In terms of free or freedom of speech, etc., etc. Or do you prefer to be in a top-down kind of system, very much like China and how China governs? So that is all up in the air at the moment, and I do think we are probably going to transition into a digital economy. And I know I've touched on this before, just in relation to Bitcoin and stable coins, etc., why they could be very, very, very good for the treasury market, just in relation to being a very large buyer of US treasury bills, what ultimately allows them to bring down the yields, what allows them to refinance 40% of the national debt at very cheap, desirable rates, what ultimately allows them to build America great again. But obviously, as you can probably imagine, reputational damage is going to be absolutely huge at this time. Now, I am speaking to some very influential people at the moment, and a lot of, obviously, retail, hedge fund managers, family offices, the whole stack, really. And what I find crazy is everybody is incredibly bullish because they think that this is a very temporary dip, and everyone's got used to what happens, right? And this is the narrative as well, is that the Fed's going to cut, That is the narrative. They need to cut. Whereas I'm kind of thinking something completely different. What is, do not cut. Hold the line, boys, because once we've held the line and everybody comes back to the US, it'll be absolutely fine. If we cut now, we look fiscally irresponsible, and it is not best for the longevity of the United States, and most importantly, the United States dollar. So we have to hold the line, even though it looks absolutely chaotic. And this is what is creating this absolute perfect cocktail and perfect storm in relation to news, in relation to opinions on different types of asset classes. And I think it's absolutely genius just in relation to what it's actually doing on the sovereign debt level, just in relation to making countries stabilize their entire economies by basically bleeding them of their assets, what is US treasury bills plus gold plus everything else in between, pretty much. So now something else what I find incredibly interesting is looking at global net liquidity against the S&P 500 or against NASDAQ. And I was kind of highlighting a couple of months ago just why I think it's very, very important to look at the large divergences between the markets as well as global net liquidity. And throughout history, we see these large divergences where the market pretty much runs away with itself and total net liquidity obviously starts to go down. And the reason why it starts to go down is due to fiscal and monetary policy from central banks, because they are trying to pull liquidity out of the system. Now, we typically see one or two things happen where either the market comes back down, obviously in line with total global net liquidity, or we see global net liquidity go up, and that going up is in relation to printing of money. Now, I was kind of talking and highlighting that I do believe that they need to bring the market down because asset prices are significantly high, inequality, obviously a lot of social unrest and a lot of things what are obviously going on. And I don't think that they can stimulate by printing money and obviously cutting interest rates, because doing that would obviously prop up asset prices, and I don't think that is going to be a very good thing to be doing, especially when you look at it from a social perspective, obviously a political perspective. So I do think that they need to bring asset prices down to obviously make it more affordable for the normal person on the street. Now, what I'll do is I'll put that on the screen now so you can kind of see how the market is obviously ticking back down, and obviously we see total global net liquidity ticking up. Now, there's a lot of people who do a lot of charts just in relation to Bitcoin and gold in relation to total global net liquidity. And I think that is very, very important because it can typically be a very good indication in relation to countries stimulating to obviously stimulate their economy. But obviously when it comes to hard assets, you typically see a uptick in price. Now, I do think global net liquidity and the market will eventually touch. Now, trying to figure out where that price point is obviously is all up for debate, and I probably need to rub a crystal ball, to be honest, to try and figure that out. But I just wanted to highlight it to kind of give people a different understanding of obviously market dynamics and obviously in relation to liquidity in the entire system, so people can kind of digest this for themselves and obviously make your own assumptions in relation to where the market is going. But yeah, I would love to obviously obviously hear your comments. Now, yeah, I would love to hear your comments on this. Obviously, if you're using any other different types of metrics for your own analysis, I would really appreciate if you could share that in the comments. Obviously, I'll check it out and see if it's of any use, so we can kind of share it with the community. So yeah, I think this plan is absolutely genius. And like I keep saying, I keep putting my thesis out there to get feedback, and I've had over 20 million impressions. Like, nobody has told me anything significant just in relation to how they would address the yields, the debt, the inequality, etc., etc., etc. Obviously, making sure that manufacturing and AI is in the United States. Nobody can come up with a solution. They all come up with the same type of things. We need to make sure that Trump does not execute his plan. And I'm thinking, okay, well, what's your solution? And no one can give me a solution. So I think I'm on the right lines. Obviously, like I was saying, I've had a lot of very, very, very influential people contact me just in relation to how I'm thinking. Now, just on that, I don't think they would be contacting me if I am incorrect. So I'm seeing that as a good sign. But obviously, that can obviously be up for speculation and debate. And most importantly, I am very thankful for obviously everybody taking the time to listen to me think, and obviously me digesting my thoughts and putting my thoughts out there. And obviously the comments, the likes and subscribes. It's very, very good. I want to get this channel to about 100,000 subscribers. Now, as you can probably imagine, I'm having a lot of problems on Instagram. And a lot of people ask me, why is your Instagram at 1.4 million followers and why is your YouTube at significantly less? And the reason is because as soon as you link out to YouTube from Instagram, Instagram significantly reduces your reach because they do not want to push users over from one platform to the other. And that's the reason why. So I have to be a little bit creative in terms of making people aware of the YouTube channel. I have to come up with creative ways in terms of driving traffic from Instagram to obviously YouTube. Now, anyway, this is just how I am thinking. Obviously, you can see it in the price action, obviously on the long-term charts, what I'll obviously put on the screen. You can also see it on NASDAQ, obviously Fibonacci retracements, etc., etc., etc. And again, I am fully aware I'm probably drawing them wrong, blah, 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 blah. I get it. The main thing for me is I just want to get the direction correct, because once you get the direction correct, you can see price movements in the long end of the yield curve. I think everything becomes absolutely crystal clear in terms of positioning and what to do. And me personally, I don't understand how some of these very, very intellectual hedge funds have zero idea what I'm talking about. So again, I find it a little bit strange, to be honest, but that is where we are. Now, hopefully you've enjoyed the video. Please like, comment, subscribe, and most importantly, to the 4 people who keep on supporting me, I hope you're having a lovely day and take care. Bye-bye.